Hey traders, checking in on the stock market today. So we've got FOMC out of the way. The bears win overall, but not a huge win. You can see we closed in the red today, but not a significant amount. The bears had a bigger win yesterday as far as the size of the pullback from the initial CPI reaction. But from here, what we care most about is the low of last week and of course the high of the reaction yesterday. That's now the range. And you can see we are fairly close to the middle of that range. And if we break this support level, we will very quickly be at the lowest price that we've seen in over a month. And that would be the goal for the bears before the end of the year, would be to take out that support and fall into this area with a lack of support and see more significant consolidation taking place. That would begin to shape up the possibility of a monthly lower high here, because we know anything, let's just use SPY. We know for SPY, anything under 430 essentially is a monthly lower high. And we're watching, is that being set right now? As I've talked about in the past, the 2-week time frame is very key for me as well. If we break that low that I just talked about, which on SPY is at 391.64, if that level breaks, 2-week consolidation will be more significant. And then it's just a question of, can bulls confirm a 2-week uptrend for the most significant trend change shift back in favor of the bulls since the all-time high? If that happens, a number of things have to happen. Number one, can bears break that support level to start that more significant consolidation? The FOMC reaction today was bearish when we released when the half a basis point, 0.5 basis point raise was released. And then when Powell started speaking, we continued bearish. So here's your initial reaction. And then as Powell started speaking, we rolled over and saw another leg down, a very significant bounce. This was a 2% bounce from the low, but a 15-minute equilibrium. And we knew to be scouting the lower high in the equilibrium because of the size of the pullback and the size of the bounce. So if I'm looking for a 15-minute lower high, how do I find that? I don't want to just guess. I want to zoom in. I want to zoom in and look for signs that that 15-minute lower high was shaping up. So we've got an uptrend, the bounce is following through. Wow, big move up. As soon as we pull back this much, I say there is space for a 2-minute lower high to be the result of the next bounce. And if we confirm a 2-minute downtrend from there, our 15-minute lower high is set. So rather than trying to guess, we have a clear level to be going off of. And as soon as this little 2-minute bear flag starts to confirm, I can then use that level as my stop. If I don't want to use 403.59 because it's too far away, as soon as the low of this candle breaks, that then tells me that's either the 2-minute lower high or I am wrong. And so that stop can then go off of 401.74 to have much less risk. And then of course we roll over and the reward is much more significant. So that would essentially have been a bear signal at 401 with follow through of over $3, $3.30 of possible profit. And the risk, if wrong, would have been about 75 cents, which is exactly what you want to have as a trader. Your reward about, in this instance, 4 times more than your risk. So that's just an example of zooming in. The other example today of that same concept is we knew to be scouting a lower high compared to the high of yesterday pre-market. Tons of space for it to form. How do I scout an hourly lower high? I zoom in and look for signs on the 5-minute time frame that we are losing the uptrend. We had rising wedges forming on SPY and QQQ, and they broke. It was also SPY losing 5-minute EMA 12 support for the first time. And it's always easy in hindsight. Want to find the posts I make in the moment to show you that it's not just hindsight. So here's a post from 11:46 a.m., which is pretty much right after the high of the day was hit. Still lots of potential 5-minute rising wedges out there. Requires patience for bears, as bulls have been able to keep short-term control. And then the 5-minute rising wedge on SPY and QQQ as examples. And then over the next 15 minutes, they both confirm hourly consolidation underway and a nice bear trade. Granted, not a lot of follow through. This is the kind of trade where it's worthwhile. If you lock in the whole trade, it's a little win. Maya style, I would potentially sell half of the position, put my stop over the high of the day. And then once the bulls did see hourly continuation leading into the FOMC announcement, I stop out and don't lose anything. So that's essentially putting myself in a position where if bears control the rest of the day, it's a solid big win. And if not, then I don't lose anything. And that's my favorite kind of trade to be in. So looking at QQQ, same deal. Key daily support 279, actually 278.78. Our key resistance is the high of yesterday. And we can see that's about an $18 range. And we are currently just under halfway in the midway point of that range. So it's entirely possible that we do trade around here into next week. This is a wide range. And if the bulls were able to regain some control, we could tighten up potentially into the end of the year. But I would expect we break right before the end of the year if we do tighten up. We ended up with that 15-minute equilibrium, so I am going to be watching our futures charts overnight tonight to see how these 15-minute tightening ranges eventually break. Do they break in favor of the bulls or the bears? Because again, it was a big drop, but then a very big bounce as well. So if bulls were to break this equilibrium in their favor, we will very quickly be over the midway point of that range, giving a slight edge to the bulls. One thing that the market bulls don't like is the fact that the dollar is at the lows right now and stocks are not up at the highs. So the inverse relationship between the dollar and equities is still intact, but equities are weaker than the dollar is weak, if that makes sense. So if we were tick for tick inversely correlated, right now stocks would be up near their highs, and we're not. Semiconductors pulling back and looking for a daily high or low, so still a clear uptrend here. Bulls need an hourly trend change back in their favor if we're going to see a daily high or low try and shape up. NVDA, daily consolidation, anything above 167.97 is a high or low. Meta has been stronger, notably, the last couple of days. So keeping an eye on that. Bulls would have to break 124.67 to see new highs, which we rejected from today by less than 50 cents. Meta's been stronger as an individual name. Still watching the Netflix potential rising wedge. We did start daily consolidation today, but the bears need to break 308.85 to start to gain favor for this pattern to potentially break bearish. We know Tesla has been relatively weak. That's continuing. High volume. It definitely looks like Elon Musk is selling. Maybe not necessarily today, but the last 2 days. And why that was more significant the last 2 days is because the broader market was seeing a good bit of green and Tesla was just bucking the trend, down 4 or 5%, while the broader market at some points were up 2%. So that was very notable. But overall, still complete bear control. Keep in mind, we can bounce 10% on Tesla tomorrow and still be in a daily downtrend. So the bears have a lot of space to remain comfortable in this daily downtrend at this point. Healthcare sector. So daily uptrend is still intact. EMA 12 still intact and still on the verge of all-time highs. Clearly our lead bull sector, watching to see if it joins Team Bear by losing daily EMA 12 for the first time in almost 2 months, but there's no sign of it yet. XLF clearly weaker. If XLF drops down and breaks support of 34.39, the daily downtrend will be confirmed and a weekly bull flag will be negated. We tried to confirm a weekly bull flag with a higher high and we failed, and now it's just a question of do we break that support? So out of our major sectors, financial sector clearly weaker. The energy sector is still clearly weaker. A little bit of a triple top on the energy sector at 87.22, 87.18, 87.36. So 3 tops all within 18 cents of each other. And healthcare is clearly stronger. IWM is clearly weaker. So again, every day as I'm doing these rundowns, I want to compartmentalize things mentally and organize them. Okay, these sectors are stronger. These sectors are weaker. These individual names are stronger. These individual names are weaker. If the broader market is showing strength, I'm looking at the stronger names bullish. If the broader market is showing weakness, I'm looking at the stronger name or the weaker names bearish. And that helps me with where should I focus when there's 100,000 flashing numbers out there. IWM, bears need to break 177.18 to take back over. Bulls are going to try and change the hourly trend back in their favor to continue with a tightening range. The biotech sector, staying on the 2-day time frame, Biotech sector remaining a bit stronger. We broke the high of yesterday. That was notable. Have to lose, well, the wick from today throws things off. Look at that bounce. V-shaped bounce to a new high of the day. Big pullback. A lot of volatility in the biotech sector. I'm sticking with the 2-day time frame for my clarity with anything under 85.84 as a 2-day lower high. But the bears have to prove to us that a 2-day lower high is shaping up. Losing sunlight fast. Gold still holding on. Didn't drop nearly as much as equities the last couple of days. Both gold and silver keeping the strong daily uptrend and EMA 12 support. Silver the highest close in months. That's notable. And that's because the metals are being more responsive to the dollar weakness. The metals inverse relationship with the dollar is more tick for tick than equities inverse relationship with the dollar. Oil continuing its daily bounce after the inventory report today. 4-hour uptrend is our guide. Have to lose the 4-hour uptrend for a daily lower high to be shaping up anything under 83.34. Bulls are trying to create the space for an eventual daily trend change attempt once we do top out. Natural gas has topped out now. 4-hour uptrend lost. So we're looking at this as a tightening range with our high, low, lower high, and we're now scouting a daily higher low, anything above 5086 with a lot of space for the bulls to work with. So that's where we stand. Again, limited days left in the year. It's just a question of can bulls regain some short-term control after all the profit taking yesterday into today to try and continue forming tightening ranges. Can bears break lows of last week for the lowest levels we've seen in a number of weeks? Can the healthcare bears lose daily EMA 12 support? Can the financial sector bears confirm the daily downtrend? These are things that the bears have to prove to us to show us that they're taking back over after the bulls have enjoyed a couple month bounce here over the last 2 months. So I appreciate you watching. Hope you had a good day out there. And thinking about doing a different kind of video, different kind of content. If any of you have heard about this Atlas trading that's all over Twitter and Zach Morris and the pump and dump scheme and the SEC charging them and all that. And I find that very interesting just because I've been following them for the last 2 years and how I've been using them for trading opportunity and just the observations of it all and that story and how it's playing out. So let me know if you'd like me to do a video on that kind of topic. Certainly much different than the technicals and things like that, but always nice to mix it up a bit. Do good things.